Oh, okay. I didn't know you couldn't hear me. I said good morning. Everything I was talking. Yeah, as you could probably have seen. All right. Thanks for letting me know, buddy. Good morning. I said, hope you had a nice, like holiday weekend there. It was nice to have it on a weekend. All right. Curious, can you hear that lady talking? Yeah? Okay, that's good. Increasing your credit card balance and delinquencies, but the consumer still has spend. You mentioned, obviously, global. Yep. Long and variable lags. Certain, and the fact is that sure looks like now in the the spending was. I mean, the big winner in terms of cash. We hit the peak in 2021. I think you've been with me since then, Marcus. 2021 in November, at the end of the year in 2021, we hit peak, and then we struggled for like a month or two, and it was bear market for 2022. And then 2023 has been nothing but up. I mean, 2023 literally started at the bottom, like it bottom ticked. And here we are at the end of 2023, and we're top ticking and hitting all-time highs. Bottom to top. And it's just such proof that when the market is shit and it's a bear market, more than a bull market, you've got to be on your toes, because if you can be catching the beginning, you've got a whole 2020, you got a whole year of pushed opportunities there available in front of you. Good morning. Damn, they're not happy. Yeah. All of a sudden there was this renewed and all in hotels. I mean, the market is right now, it's just semi unstoppable. Well, it would be stopped by some kind of a concerning event. That's what could happen. But the market's not going to end here on its own. Absolutely no reason why it would. All right, I'm going to turn this off here. I'm going to turn off the sound on it. But we'll keep it in the corner. Love RCL. Got RCL. Carnival. Yeah, all those are good. Everyone was trying to get into those travel stocks for like the last 3 years. And only in the last, half a year or so did they really start to take off. So, you can spend all your money on the opportunity, blowing all your money trying to catch the start of that. That's why it's important not to have your head stuck in anything and to just trade what you see, trade what's going on, keep abreast of what's going on, that kind of thing. All right. Good morning, everybody, everywhere. Am I live streaming? I believe I am. It doesn't say that. Was that what that means? Yeah. I think I am live streaming. Let's see. Yeah. All right. Good morning, everybody, everywhere. Yeah, this morning we are let's see, I'll give you the exact percentage. 410.47 divided by 409.32. Wow. We are 0.3% away from absolute all-time highs on the market. And you know, when things break all-time highs, that's usually the beginning for certain, accredited investors, institutional investors. That's the beginning. So in other words, this whole year has been just getting out of a hole as far as the market's concerned. Today, a lot of people are going to be telling you, whoa, the market's so extended. It's just the beginning. If we break out of the high here, we might encounter some resistance. It might turn into a fake out. We might go back into a dip a little bit, but things will tighten up, and that might take months, et cetera, et cetera. But it also could, go further. And if the market does do an about face and starts to turn down from here, and everyone's like, "See, I told you, go bear, go bear." Don't be that person. You are going to get screwed out of your money somewhere at a very small pullback amount, like 10%, 8%, 7% pullback on the market highs. And it's going to rip and roar starting whenever that is. And it's going to use you as fuel for the fire, and you're going to be left without any money. So, understand we're in a bull market. It started literally the first of the year, pretty much. This whole year has been a bull market. 2022 was a bear market. And we are just now today getting to all-time highs. That's the beginning. Now we have 5, 7, 10, 12 years of bull market ahead of us. Unless there's, like I said, any kind of derailment economically worldwide. But that's a whole nother thing. I mean, in the meantime, you trade the bull market. The economy is set up. Employment, business cycle, rates being cut. The economic cycle is beginning. And it actually started beginning 2 months ago. And then the beginning of the year was just front running. The market running was front running. And even now, 2 months ago, with that run, it's still front running. When everyone else finally realizes, wow, I should put some money in the stock market, that's when it'll have been done front running, and everything will have appreciated as much as it should have. Because there's people that think about the future way before you. And if you're just thinking about the now, that doesn't work on the stock market. The reason stocks go up is because of the future, not because of now. So, if you wait until they've gone up and go, wow, things are going up, you'll have missed it. That's why, I was just saying to Marcus, one of the best things you can do is be all over a bear market, just sitting there every day waiting for the certain bottom signals. When you are swing trading and investing in the stock market, you use the market as your guide. The market tells you what's going on. Don't listen to anybody but the market. Look at the market. The market will tell you. Let me show you. I say over on TikTok, those people are not seeing the market chart. Let's get it up for you guys. So there was 2023. And then before that was 2022 bear market, and then the 2021 bull market. And it was pretty much that simple. 2020 and 2021 were a continuation of a bull market that was still raging on. We just got sort of derailed by the pandemic. Then it got supercharged. And then 2023 too was bear market, and 2023 this year was bull market. S&P 500 is up 24% on the year to date. And you can see we are literally at the top right now. And what could happen is we could break out. We could have a little fake out rally run thing that goes on for a week or two, or a day, or a half a day. Doesn't really matter. And then that pulls back in. But then what you'll see is it won't go as lower than this pivot point back here. And it probably will only go half that distance, roughly, maybe 2/3. And that will be over the course of, could be a couple of months. Then it will get back up and it will just keep tightening up like that. And maybe it'll break out a little bit, fake out, dip some more, and it'll just keep tightening until at a certain point, probably November, election day of 2024, where it will really just be fully unleashed. Because there's still a little bit of uncertainty of whether or not, there's going to be high regulation on businesses under a more democratic administration, or if we're going to have a more capitalist type of economy for a 4-year business cycle with a conservative in the presidency. And so it's hard to say, which exact stocks. But the thing that a lot of people tend to miss is that it's irregardless. It's once the decision is on, the game is on. Like things will run, and the market's volatility will be unleashed, regardless, because you'll have an uncertainty event behind you. So there'll be nothing more to wait for. Those crossroads will go one way or the other. Electing one person or the other won't make life, won't make businesses and the economic cycle go down necessarily. It will just cause certain kinds, a texture of certain kinds of businesses to outperform others. And they probably both will do well. It's just that one will only go up 5% on the year, and another sector will go up, 15, 20% on the year. So, it'll all be good. As always, the worst thing you could do, the best, what's the worst? If the worst you could do is put your savings on QQQ, the NASDAQ, the growth market, that's the ideal. If the worst you could do is that, you're going to do great. And in 10, 20 years, as it has shown, prior results are not a guarantee of future results, but as has shown, you'll double your money every 7 years. QQQ, that's the ticker you'd want to be in at the worst, and that's really probably the best thing you could do, because beating the market, especially in a bull market, that's a daily serious endeavor. It's a daily serious endeavor. So a person who, wants to beat the market, you could, if you have a day job, you could work on that at night, picking stocks and this or that to invest in, and then just like looking at your portfolio every night, and then maintaining it and putting decisions on there, stop losses and profit target, et cetera, et cetera. But you're still checking every day. You can't beat the market. No one beats the market without being a serious daily, trader. You don't have to actually trade every day, but you have to show up every day. So you can't have, there's no real like good middle ground. There's no good middle ground. There can be, fucking around, like if that's what you want to do, that's a middle ground, but you're not going to beat the market. You're probably going to lose all your money. I mean, realistically, I'm not saying anything against you, but that's 90% of traders lose 90% of their money in the first 90 days of fucking around. So it's an absolute certainty, because that's like saying 100%, because anything over 80%, the Pareto principle, 80-20 rule, anything over 80% is a damn near 100% certainty. So 90% is 100%. I mean, if you lose 90% of your money, you've lost all your money. And what are you going to do with it? Rest of it, it's going to take you 10x to get it all back. So anyway, you got to show up every day, and if you want to be part of a community like mine, click the link wherever that is. Go to my profile, click the link, and that's what we do every day. And, I'm there every day, and I put out alerts, and I'm typing things into the group and into the community, and that way you can help be kept abreast of what's going on. And that's a better middle ground. But I would prefer that you also educate yourself and learn how to trade, so that anything you get into, you know what to do with once you're in it. Because an excellent trader, you could throw darts at the stock market. An excellent trader will get you out of everything that's you're not supposed to be in within minutes. And they'll leave you in what you're supposed to be in. You could throw darts at the stock market, and an excellent trader will make that profitable. But if you're picking things, and you don't know how to manage your trades, you will lose money, because it's all about knowing what to do with what you have once you have something. Before that, you can improve. You can be a stock picker, is what they call it. You can read charts and find stocks at excellent inflection points, and that's very important. And you can learn that from me as well. But to be able to hold something and know whether or not to cut it or take profits, that takes a lot of learning. So if you're not there, be part of a community. You want that middle ground of being somewhat active, but you can't, be that active, or you're just starting out and maybe you want to be a fly in the wall. You got something. You can either be in QQQ, which is like SPY, if anybody's ever heard of SPY, but QQQ is better. It performs more, and it represents the entire growth market, versus value stocks like Campbell's Soup, which don't go up like, AI stocks and stuff. But QQQ is comprised of all those incredible growth stocks, and you get a much higher return from the QQQ, such as 35%, etc. What has the QQQ done this year? Let's see. The QQQs have done 58%. They didn't even mention that on CNBC. They said the S&P 500 did 23.9% this year. What they failed to mention is the QQQ, which I just recommended to you guys, did 58%. Okay, so they recommend you get in the S&P 500. I recommend you get in the QQQ. My studies over, however long the QQQ has been done, and the S&P 500 over 100 years show that to be in growth stocks, the QQQ, it's a wonderful established index for you if you just want to just put your savings into something. Again, this is just educational purposes here, but QQQ is where you would want that. Now, it might, let's say when you get in, like let's say it's here right now at what we think is a top. It's not a top. I don't think that, but it could be. Anything could happen. Went up 58%. And let's say it goes down from here. So you get in, you put your life savings into the QQQ, you get in. Well, the current macroeconomic cycle shows that it's not going to retreat, but let's say it does retreat 25%. It's going to come back. It'll come back in 6 months or a year or 2 years. But the thing is, when you put your money into your savings into something like stocks like that as an index investor, you've got to be thinking 7 years. 7 years. 7 years to double your money. 7 years, And if you're off a little bit, it doesn't matter, because let's say you're off 2 or 3 years and you went flat for 2 or 3 years. When you went down, you came back up, and it took 2 or 3 years to come back up to where you were. But if you keep feeding the machine, when you were down, you've actually dollar cost averaged some stuff down there, right? But by the time 7 years comes, you won't have maybe doubled your money, but with the dollar cost averaging, you probably will have gotten very close. But by year 8, year 9, you'll be on course. And then that next cycle of 7 years out, 14 years, maybe it'll hit by year 11, you'll have doubled again. And so it all works out in the end, but you have to have a long-term goal-oriented outlook to how you do that. And that should be the bottom of your pyramid, of your risk pyramid is what I call it. Risk pyramid, your bottom of your pyramid should be in, longer-term goal-oriented assets, and that can include cash flowing businesses and real estate, cash flowing properties and treasury bonds, all that kind of stuff. But by the time you get to the very top of your risk pyramid, you have a very small amount of your money, a very small amount doing, option lottos and ER lottos and playing, fucking around with it. What I call fucking around. So there you go. The market's looking good this morning. And what do we got as far as stocks go? And we've got 4 minutes until the market opens. Nothing good. Nothing good. Maybe VLCN. Nah. Rise B, which is $61. Rise B. Let's take a look at Rise B. But yeah, the market is set to open at to break all-time highs today. Pretty damn cool. We were only a split percentage away from all-time highs on S&P 500 and on the Qs in the growth market. So across the board. No, Rise B looks like a buyout to me. You can tell that by the way the chart looks. And it looks like, let's see if I can get any 13 minutes ago, 1 hour ago, Bristol Myers agrees to buy Rise B for about $4.1 billion. See, so, buyouts don't trade. The volatility gets squashed and there's no trade left, and it just becomes an arbitrage trade at most. An M&A trade, which you don't want to be in. But, there's hedge funds that specialize that and can provide you an M&A return. It's a great way to diversify your portfolio if you have one. If you're trying to do wealth management, that's a whole nother level. But yeah, you might want to do that because M&A can give you a uncorrelated return, which you want when you want to diversify your portfolio in order to, they say concentration builds wealth, diversification protects wealth. Just remember that. Very important, kind of like change up of the gears that you want to understand you're in. Are you looking to preserve your money? Then that's one style of investing. Are you looking to build your money? That's another style of investing. There's a certain point, you'll see, when you get there, there's a certain point where you're just like, what, I want to preserve my money now. There's enough money is enough money. You'll see. You'll find out someday if you follow me. All right, 1 minute till the market opens. And it's looking good. I'll tell you what's hot right after the open. Once we get that information in within the first few minutes, if not the first 60 seconds, we'll know. Arbitrage ain't the worst thing. No, but like I said, it provides uncorrelated returns, which is useful. Spend everything you have on zero DDT options. Yeah, Darlo, that's awesome, man. No, don't do that, people. That's just what somebody said, and he's being silly. But there's some strategy there, but it is same as day trading. Very high risk. High risk. They say high risk gives you high reward, but it also gives you high risk. Okay, so like after high reward can come high risk, and you do it again, So, yeah. Don't forget that high risk comes with high risk. All right. Out of the gate here, what do we got going on the market? Tesla popping. Tesla does not want people who want to invest in Tesla believe, apparently off the first 10 seconds of the open here, that they want to be in that. They do not want to be left behind. There's a little bit of FOMO kind of feeling on Tesla. It's had a very bullish, sort of tight flag recently, and then popped and was even more bullish. And, it's inching its way out of a lot of pressure that it's under. Right now it's under a lot of pressures in sentiment, and yet it's still acting really bullish despite it's got the relative strength. So it's not obviously bullish, but it has the secret bullishness going on in the relative strength. And so, yeah, let me see if I have any Tesla here. I just want to make sure I do have an allocation of Tesla. I think I don't. Okay, there we go. I do. Thank goodness. I do not want to be without a little allocation here on that. That could very well be. Yes, sir. Okay, we are now 1 minute and 30 seconds off of the open. And just on that alone, we have Duolingo flying out of the gate, almost up 1.4% already from the open. So that's very strong. So let's pull up Duolingo and be watching that. And I'm going to take a look at its daily chart. I think I'm also in Duolingo already. I know I want to be. No, I'm not seeing it in my holdings, which is a travesty. It could be just because it didn't have the right entry inflection point for me, and I may have already taken profits on how well it's doing. All right, it's pulling back now anyway. The market is pulling back. Apple is pulling back kind of hard, shifting down kind of hard. The QQQ is doing their first, and the market itself, the SPY, doing this first pullback after that push up off the open. 2.5 minutes in Duolingo. Others, by the way, at the top of the progress list there continues to be MDGL. MDGL just continues to do so good. I do believe I have that, or I might have gotten out of that to rotate into something else. Yeah, I do have that. Good. I'm up big on that this morning. All my holdings that have a lot of Bitcoin stuff. But then I've also got Plug and AMD, Costco, Beyond, Lulu, Nvidia, DraftKings, Team, DDog, AMR, Net, Tesla, AFRM, Carvana, Shopify, Avgo, SMCI, MDGL, Fiven, JetBlue, Love, Palantir, Starbucks. I mean, the list goes on, and then a lot of those Bitcoin stocks, RCL, Apple, etc. Duolingo pulled all the way back to its open now, but MDGL continues to remain strong. Let's take a look at MDGL. I think the problem with MDGL, I believe, is it's hard to get an entry. Oh, that's just a gorgeous, perfect VCP setup on MDGL. Today's a perfect day to get in. Yesterday was a perfect day to get in. Those 2 days today, and then once it breaks out of recent highs at 245, that's another opportunity to get in. But you have an opportunity to get in a little bit early today, and you had an opportunity. I probably alerted in the group on what was that? Friday. What was that? Friday on MDGL, and MDGL is piqued our interest because it went 100% in 27 bars. So that's pretty impressive. And even did 80% in 18 bars. So MDGL continues to be a top name you want to be on top of there. I'm already in it, so I'm already participating. Most, if not all, of my positions are credit spreads, which is participating the same bullishly on any of these stocks. Just that whenever they go down or they go sideways, I continue to make a little extra money, a little icing on the cake. All right, Tesla definitely reversed, just like one of the people in here said. Tesla always pops off the open. Yeah. And Apple coming up while Tesla's coming down. So Apple off to a sketchy start, Tesla as well, but the S&P 500 and the Qs are raging. They are really roaring this morning. And I don't know. Let's see. Is that all-time highs on the Qs? Let's watch. There could be all-time highs on SPY or the Qs. Nope, not yet. We got to get over. Let's see if I can get the information on it here. We got to get over 410.47. Which is the high that we put in, I believe. Let me see. High. Yeah. Yeah, that's pretty much the high we put in a couple days ago. 58% gains this year to date on the growth market. QQQ, growth stocks, insane. 58% return year to date. January 1 to today. 24% returns on the S&P 500. S&P 500 also consists of a lot of value stocks and consumer staples, and so that brings down the return. You want QQQ. And in a bull market, so long as you can predict it, if you want to leverage that up, there's TQQQ, which will give you even greater return. 3 QQQ, T, I think the T stands for 3, T3, QQQ, triple QQQ or something like that. So let me take a look. I think it's 3x. I just want to be sure, not 1.5x or 2x or 2.5x. Well, it doesn't show me here, Ultra Pro QQQ, but let's see. From the bottom of this last rally to the top of this rally, so over the last 2 months, TQQQ went like 68%. So if it's triple, then we're talking about like 23% that move. Let's see. It's pulling it up. SPY high tight flagging right now. So is the Qs, but SPY. Okay, SPY's just broken out to newer highs. Okay, I got the QQQ up. So we're talking about, let's see, from the bottom of this November rally to the top. Yeah, 19.9%. So TQQQ providing 19.9 times 3, 59.7. And I think it's at 68%. Somehow TQQQ is providing even more than a 3x return. I don't know what that's about. But fine, we'll take it, right? Maybe it's 3.5x return. I don't know. You have to look that up. TQQQ. I need to look at HUT. Is this dropped a lot? Let me see. No, not really. Okay. So that's just some options pricing that need to settle in. And then Smelly. That'd be Mercado Libre. Now, overall, looking at sectors, the market, gold, just everything overall, what we have so far that we can see is the VIX is indicating bullish. SPY and QQQ, the markets are off to a bullish start, but the VIX is very helpful in determining any divergence information. And from the VIX, we're getting convergence. So bullish convergence. And then we have rates sideways. That's okay. Rates neutral. Fine. We'll take it. If rates could go down, that'll really make things soar. But we're already soaring on the fact that rates aren't going up. And that's enough. And that's going to continue to happen. Rates might go sideways. They might even retrace a little bit, come down then. But overall, every passing day, the market itself will probably respond by getting more and more public money invested. Consumer staples are sideways. Financials are sideways. Industrials up a little bit. Base materials up a little bit. Discretionary spending is actually fading, so that's a little odd. So that's why Tesla is going along with it. That must be a big part of Tesla. So like luxury spending, think of it that way, discretionary spending. Healthcare dropping. That's a bullish sign because healthcare is a defensive. So when the healthcare drops and everything else is kind of going up, it's sort of like if you were to put some nitro in your car. It's like basically they're stealing money from healthcare and putting it into the other areas. It's rotation. It's bullish rotation. Is what we're seeing on whole between all that. Communications dropping. That'd be Meta would be in there. So Meta may be dropping also, but the S&P 500 high tight flag and the Qs 3-point uptrend already off of the open. What else we got here? I missed one particular sector, and what was it? Staples, they're going sideways. Financials, utilities. Utilities are also going sideways. Rates sideways. And then gold dropping. That's a bullish sign for the business cycle because gold can act like the ATM machine. You put your money over there for safety, and then when you need it, you make your withdrawal. That causes gold to go down. Supply decreases, and then that money goes elsewhere on the market. The fact that Tesla is going down while the markets are going up is telling me that there's less index investing going on today than there is stock picking investing. So there's very strategic investing going on today, and that tells you that it's smart money. And I would follow, whatever smart money is doing. Find out what's doing well, stick to those. Avgo is doing well, CrowdStrike, ANET, the FANG stocks, Cyber, DDS, WDay. These are top of my list of stocks that are have been doing excellent the last few months. And then, of course, MDGL, Saya. I think, what is that, a biotech? Let's go take a look at that. Pfizer, yeah, perhaps. Saya, let's see. Transportation, trucking, okay. Yeah, I'm not super in love with this stock. The chart's good. The chart's great. It's just, looks a little bit scraggly. But it's doing well. I mean, as an investment, it looks, great. I think CNBC is saying the best sectors this month are consumer discretionary, and that's the one getting sold off the most right now. That's exactly what happens. It's a pump and dump. It's a form of a pump and dump. We want to rotate out of, defensives. Whoa, the VIX is really popping now. Calls across the board, puts being sold off. Calls are in play. The market is hot. Let's go take a look at those market numbers and see if we've broken all-time highs yet. 410.47. We are almost there. We're at 410.25. We're 20 cents away from breaking all-time highs. And the S&P 500 may have already broke those highs. Let's take a look. Sometimes they go back and forth, like two stallions. No, the S&P 500 needs to break 475.90. It's at 474.61. Actually, S&P 500, in order to break all-time highs, needs to break 479.98. 479.98. Right now it's at 474, so it's 5 points away. That's a good 2 days distance away, if you ask me. But the QQQ, the Nasdaq, is right there. In fact, it's gonna break it today. I mean, but from there it might pull back. We'll see what happens, because the S&P 500 has some catching up to do. So you don't have, when you don't have all the stars in alignment, you don't get that sympathetic resonance, that harmonization, the wave doubling. You don't get a tsunami. You don't get what do they call them, a rogue wave, unless the waves can combine and be in sync with each other. And right now they're not super in sync. but they're definitely both bullish. They're just sort of at different pole positions. If the S&P 500 can be leaping ahead, that'd be good. But today it looks like growth is leaping ahead, and that's about the most bullish you could be if growth is running. Well, the most bullish you could be is if everything was moving up and all tides rising. Signal. Well, crowd. Let's take a look at crowd and a couple other of these stocks. Let's see. That are doing well off of the open. Crowd's been on an amazing run, and it's something that you want to be either in and out or in. I mean, that's just a money-making machine. Like, if you were to go to a casino, this would be one of the slots that's paying. It's a pretty good analogy because most of you don't know how to do anything on the stock market except gamble with it. But eventually, with enough time, maybe 2 years, you can learn, how to manage risk, and then it becomes more like any kind of measured investment in life is a risk. Like I tell everybody, walking out your front door in the morning is a risk. Everything's a gamble in life. So people are like, stock market's just gambling. Well, you fucking you opening your mouth is gambling. Shut the fuck up. It's not. It's more than, everything is gambling in life. You eating Cheetos is gambling. Yeah. Everything is gambling. You're picking risk every step you make in life. Getting in your car, getting in, a bus, getting in an airplane, taking a walk outside, having a gun versus not having a gun. Both, there's risks on both sides. There's just everything is a gamble. And then, there's certain things that you can do that can produce wealth. I don't think eating Cheetos is one of them, but, some people might say it is. Carl says farting after chili is a gamble. It really is. You can ask my wife. No. All right, we are 18 minutes after the open, and just everything's running smoothly. I've mentioned a bunch of names that are going very well. Crowd is an entry here. There's a lot of great stocks that are entries here. For those of you who are members, you can see here on my this watch list right here. I'll highlight it in hot pink so you can see. Okay, this list right here is all the pole position stocks that you want to really be paying attention to. And then some of the stuff that it may have missed are all the ones you should know also and be thumbing through, from NVIDIA and Apple and Microsoft down to Palantir and Uber and stuff like that. If it's not on here, you should still have this other list of hottest, most popular stocks as well that you should be looking at. And then you should learn to read charts and understand whether or not something's an entry or not. Well, these are them and those are them. And together, that's enough. That'll be enough for you. All right. Have a great morning, everybody, and I'll see you back in the group. Don't forget to click the link in my bio if you want to come join the group, and we'll see you shortly. Send me a private message if you need to ask me anything. Happy to help. Yeah, snow, All right. We are starting off the week well. Oh, by the way, we got JOLTS and some other economic event on Friday, and Thursday is the JOLTS, and Friday is another one. So we've got pretty much a nice free runway this week.